In today's XRP market discussion, there is a viral claim spreading across social media and crypto communities suggesting that XRP could reach an extremely high price target of $1972 by June 9th, along with the idea of $35 million entering the market within minutes. These kinds of predictions are creating a lot of attention, excitement, and confusion among investors and viewers. At the same time, the real market situation for XRP continues to be influenced by multiple factors such as global crypto sentiment, regulatory developments, institutional interest, and overall liquidity conditions. While some people are focusing on extreme price predictions, others are trying to understand what is actually realistic based on current market behavior. This video breaks down what is being claimed, why such numbers are going viral, and what it could mean for XRP holders if any part of this narrative gains momentum. XRP has always been one of the most discussed digital assets in the crypto space. Whenever there is major news, speculation, or price movement, it quickly becomes a trending topic. Recently, a new claim has started circulating online suggesting an explosive price target of $1970 per XRP by June 9th. This type of prediction has shocked many viewers because it represents a massive jump compared to XRP's usual trading levels. Alongside this, there are also discussions about sudden liquidity events, with claims of millions of dollars entering the market in a very short time frame. But the real question is simple. Is this based on actual market data, or is it just another wave of hype-driven speculation? To understand that, we need to carefully break down what is being said and what could realistically happen in the crypto environment. What if I told you that a claim is going viral right now saying XRP could hit $1970 by June 9th with $35 million entering the market in minutes? Sounds explosive, right? But here's where things get interesting. In the crypto world, big numbers often spread faster than real facts. Today, we are going to break down this entire prediction step by step, understand where it is coming from and whether there is any real market logic behind it or if it is just pure speculation designed to grab attention. Welcome back to XRP On Moon, your place for simple and clear updates about everything happening around XRP and the crypto market. Here, we don't just repeat headlines. We break them down so you can understand what is real, what is hype, and what actually matters for the market. In today's breakdown, we are going to carefully examine this bold XRP prediction and see how much weight it really carries. We will also look at the kind of market conditions that would be required for such a move to even become possible, and whether current trends support anything close to this scenario. The first thing to understand about a claim like XRP reaching 1972 by June 9th is how extreme that number actually is when compared to real market behavior. In normal crypto cycles, even strong bull runs tend to move in percentages, not sudden jumps that multiply an asset thousands of times overnight. That's why this prediction immediately raises questions among analysts and experienced traders. To put it in perspective, XRP has historically moved based on clear market catalysts such as adoption news, regulatory clarity, and broader crypto market momentum. Even during its strongest rallies, price movement has followed structured cycles with pullbacks, corrections, and accumulation phases. A direct move to a four-digit price level would require a completely different level of global financial inflow than what the crypto market has ever experienced before. Now, the second claim attached to this viral prediction is even more interesting, the idea that $35 million could enter the market within minutes. At first, this sounds like a large number, but in the context of global financial markets, it is actually relatively small. In fact, XRP often sees similar or even larger liquidity movements during normal trading sessions across exchanges. So while $35 million may sound dramatic in a headline, in real terms, it does not represent a market-shifting event on its own. This is where understanding market psychology becomes important. In the crypto space, numbers are often used to create emotional reactions. Large price targets attract attention, and short-term liquidity figures are used to create urgency. This combination is what makes such claims spread quickly across social platforms. However, when we break it down logically, price movement is not driven by isolated claims or sudden expectations. It is driven by consistent buying pressure, sustained volume, and real-world adoption. Without these elements aligning together, extreme price predictions remain theoretical rather than actionable. Another important factor is market capitalization. For XRP to reach a price like $1972, its total valuation would need to exceed not just the crypto market, but in some calculations, even global financial liquidity pools. This would require massive institutional restructuring, global settlement integration, and widespread replacement of traditional financial systems in a very short time frame. At the moment, there is no confirmed evidence suggesting anything close to that scale is in motion. What often happens in these situations is that early speculation gets amplified. One prediction gets shared, then repeated, then exaggerated. Over time, the original claim evolves into something much larger than what was initially stated. This is how extreme price narratives are born in crypto communities. So while the discussion around XRP continues to grow, it is important to separate excitement from realistic market structure. The actual movement of XRP will depend on real adoption, regulatory clarity, and institutional participation, not sudden viral predictions. When we move away from viral predictions and focus on real market behavior, XRP's price movement becomes much easier to understand. Instead of extreme targets, the market usually reacts to three core forces: adoption news, regulatory developments, and overall crypto market cycles. These are the real drivers that have historically influenced XRP's performance. One of the biggest factors behind XRP's long-term attention is its connection to cross-border payments and financial settlement systems. Ripple's network has been working on building partnerships with financial institutions, aiming to make international transfers faster and cheaper. Whenever there is progress in this area, XRP tends to see increased market interest because investors start expecting higher utility demand. However, it is important to note that adoption in the financial world does not happen overnight. Banks and institutions move slowly, with strict compliance requirements and long testing phases. This means even strong partnerships take time before they fully reflect in price action. So while adoption is a strong long-term narrative, it does not instantly translate into extreme price spikes. Another major factor is regulation. XRP has spent years under regulatory uncertainty, especially in the United States. Any positive or negative regulatory development tends to create sharp short-term reactions in the market. When clarity improves, confidence usually increases, and when uncertainty rises, volatility follows. But again, these movements are typically gradual and reactive, not explosive enough to justify unrealistic price jumps in a very short time frame. The third factor is the overall crypto market cycle. XRP does not move in isolation. It is heavily influenced by Bitcoin and the broader crypto sentiment. In bullish phases, XRP can see strong upward momentum, while in bearish phases, it often consolidates or declines along with the market. This interconnection makes it difficult for any single asset, including XRP, to break away into extreme independent price levels without the rest of the market supporting it. Now, when we compare these real drivers to the viral claim of XRP reaching $1972 by June 9th, the gap becomes clear. Such a move would require not just one of these factors, but all of them aligning perfectly at maximum strength within an extremely short period of time. That includes massive institutional inflows, global financial system integration, and unprecedented retail demand all happening together. In reality, markets rarely behave in such a perfectly synchronized way. Instead, they move in phases: accumulation, expansion, correction, and consolidation. Each phase takes time, and each is influenced by different levels of investor behavior. This is why experienced traders tend to focus less on extreme price predictions and more on structure, volume, and long-term trends. They understand that sustainable growth in assets like XRP is built gradually, not instantly. At the same time, it is also true that XRP continues to hold strong community interest. Every time new speculation appears, it shows how closely people are watching its potential role in the future of digital finance. But separating emotion from reality is what helps investors make clearer decisions. When we talk about XRP's future price movement in a realistic way, we have to shift the focus from extreme viral numbers and instead look at what conditions would actually be required for a major breakout. Not hype-based scenarios, but real-world market developments that could influence long-term value. One of the biggest potential drivers for XRP is institutional adoption of blockchain-based payment systems. If more banks, payment providers, and financial networks start using technologies similar to Ripple's infrastructure, then demand for fast settlement assets like XRP could gradually increase. This kind of growth is not instant. It builds step by step as trust and usage expand over time. Another possible factor is the rise of tokenization of real-world assets. This includes things like real estate, stocks, and bonds being represented digitally on blockchain systems. If XRP or related networks become part of that infrastructure, it could significantly increase transaction volume on the network. Higher usage can support stronger long-term valuation, but again, this happens through adoption cycles, not sudden price explosions. There is also ongoing discussion about exchange-traded products, ETFs, and broader institutional crypto exposure. If regulated financial products involving XRP ever become available in major markets, it could bring more liquidity and stability into the ecosystem. However, even in the most optimistic scenarios, institutional inflows tend to enter gradually rather than all at once in minutes or hours. Now, when we compare these realistic developments with the claim of XRP reaching $1970 by June 9th, the difference becomes even clearer. For such a price level to be achieved in a short time, the entire global financial structure around XRP would need to transform almost instantly. That would require massive liquidity shifts, worldwide regulatory alignment, and full-scale institutional integration happening simultaneously. In real market conditions, that type of acceleration is extremely unlikely. Markets simply do not move in straight vertical lines without pauses or corrections. Even the strongest assets in financial history have experienced cycles of growth and consolidation. XRP is no different. When momentum builds, it usually happens over weeks, months, or even years, not within a few days based on speculation. It is also important to understand that liquidity depth matters more than price predictions. Even if large sums of money enter the market, they do not automatically translate into exponential price increases. The order books, exchange flow, and available supply all influence how price reacts. This is why claims like $35 million in minutes sound dramatic but do not necessarily indicate a structural market shift. At the same time, XRP does remain a closely watched asset because it sits at the intersection of finance and blockchain innovation. Any real progress in adoption, regulation, or institutional usage can still create strong upward pressure over time, but that pressure builds gradually and depends on sustained developments, not sudden viral forecasts. So the realistic takeaway here is simple. XRP's long-term potential is tied to real-world integration and financial utility, not extreme short-term predictions circulating online. Understanding this difference is what separates emotional reactions from informed market thinking. When we bring everything together, the picture becomes much clearer. The claim that XRP could reach $1970 by June 9th, along with $35 million entering the market in minutes, is the type of narrative that spreads fast in crypto spaces, but it does not match how real financial markets operate. What we have seen in the previous parts is that XRP's price movement is shaped by structured forces like adoption, regulation, liquidity, and overall market cycles. These factors build momentum gradually over time. They do not create instant vertical price explosions without strong and sustained global financial support. At the same time, XRP continues to remain one of the most discussed digital assets because of its potential role in cross-border payments and financial infrastructure. If real-world adoption continues to grow, then long-term value appreciation is possible. But this kind of growth depends on consistent development, not short-term viral predictions. It is also important to understand how narratives like this form. In crypto, attention often moves faster than facts. A single idea can spread across platforms, get repeated, and slowly turn into exaggerated expectations. This is why we always need to separate market reality from market emotion. For any asset to reach extremely high valuations, it would require massive and sustained global liquidity, institutional scale adoption, and complete transformation of existing financial systems. These are long-term structural changes, not events that happen within days. So instead of focusing on extreme targets, it is more practical to watch real indicators like trading volume, regulatory updates, partnership developments, and overall market sentiment. These are the signals that actually reflect where XRP is heading. At this stage, XRP remains in a long-term development and adoption phase, and like all digital assets, it will continue to move through cycles of growth and correction. Investors who understand these cycles are usually better prepared than those who rely only on viral price predictions. Before we end this breakdown, remember that crypto markets are highly volatile. Prices can move up or down quickly based on news, sentiment, and global financial conditions. Always do your own research before making any investment decisions. This content is for educational and informational purposes only, and it should not be taken as financial advice. If you found this breakdown helpful, make sure to like this video and subscribe to XRP On Moon for more clear and simple XRP updates. Your support helps the channel grow and brings more real-time insights straight to you. Stay informed, stay aware, and we'll see you in the next update.